been making records since 90. Pack for Lamborghini since 90. Made my first meal of 90.
Good day, good people, wherever you are. My name is Deriv. Today I'm going to show you how to trade synthetic indices. So we're going to start with an introduction as to what is synthetic indices and what you need to know before you start getting your hands dirty trading synthetic indices. All right, so I'm going to show you how I managed to make this kind of trades where I actually take a very small amount to a significant amount using synthetic indices. All right, so today I'm going to show you what synthetic indices are, what are the advantages and disadvantages of trading synthetic indices, and how you can get started as quickly as possible. As you can see, guys, synthetic indices are a very profitable trading instrument, and as you can see, you can trade with a very small amount and actually make a very significant amount of profits. All right, so you can see here $25 was taken to $145, and you can see here I traded here with $20 and taken to $102, and you can see this type of trades that I do. The $161 was taken to about $445 that is on a single trading. All right, as you can see, guys, it's very profitable for one to start trading synthetic indices. So you can see here in this trade, $650 was taken to $913 trading synthetic indices. All right, so just to show you the power of trading synthetic indices, $49 was taken to $166 right there, and you can see the kind of trades that I actually take when trading synthetic indices. $36 taken to $53 trading synthetic indices. As you can see that all my analysis is on point, and I am going to show you how you can trade the same. All right, $11 there was taken to about $41, and you can see how perfect the entries are right at the point where the market turns. All right, so if you don't know what trading is, and if you're a newbie in trading and you are totally new in trading, don't worry, this video is made specifically for you. I'm going to show you what synthetic indices are, how to get started with them. So I think these videos are going to be like a series where I'm going to show you step by step, because we cannot cover everything in one video. I don't want videos to become very long in such a way that you lose your attention. All right, so you can see here $11 was taken to $44. It goes on and on. $11 taken to $95. It goes on and on, right? Because synthetic indices are just very profitable. You can see here, even $8 was taken to about $73. That's the power of synthetic indices, where you can actually make more with a very little. All right, and actually be able to profit from these price movements. $41 taken to $139. This is just to motivate you and to show you that trading synthetic indices is very profitable and it is possible. These are the screenshots that I usually take when I'm trading. As you can see, guys, I don't take screenshots almost every time I'm trading, but these screenshots, I take them to specifically show people who are new and people who are looking to get into synthetic trading, or trading for that matter, to show them that it is possible. Even with a small amount, you can actually be able to actually make money. All right, so with that being said, guys, let me get into my disclaimer. All right, so just as a disclaimer, guys, CFDs are considered complex derivative and may not be suitable for every retail client. All right, CFDs are complex instrument and come with high risk of losing money rapidly due to the leverage. Okay, if you don't know what leverage is, we shall talk about it. All right, and you can research about it. Okay, you should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing all your money. If you invest in these products, you may lose some or all of your investment capital, and the value of your money or your investment may fluctuate over time. You should never invest money that you cannot afford to lose, and never trade with borrowed money. Please note that this video is not intended as financial advice, and always do your due diligence or consult a qualified professional financial advisor before making any decisions with your money. So with that being said, guys, let's get into what indices are. All right, so what are synthetic indices? Synthetic indices are unique indices that mimic the real world market movement, but with a twist. They are not affected by the real world events. All right, these indices are based on a cryptographically secure random number generator that is audited by an independent third party to ensure that they cannot be manipulated or tempered. All right, so some of you might be asking, since synthetic indices mimic the real world market, what moves them and what is the driving force behind the price movement? So we are talking about a software here that generates random numbers without anyone knowing which number is going to be generated. So the broker or anyone, or even the person who created it, cannot know what number can be generated next, because the company is actually regulated by a third party that will just ensure that they're not manipulating or tampering with this software that generates the numbers. So synthetic indices have a constant volatility and are free of market and liquidity risk. All right, so how to start trading synthetic indices? Synthetic indices offer tight spreads and leverage trade. So if you would like to trade synthetic indices, you can try them through a broker called Deriv. So depending on your risk appetite and your trading style, you can try Deriv's synthetic indices using trading platforms such as CFDs, options, and multipliers. The link to register is in the description below. So here is why it is very important for you to register with the link that I'll put in the description. When you register with the link that I'll put in the description below, check in the description below for the link. You'll get access to the Deriv Richard VIP signals, where I'll be sending you signals for high accurate signals that you can use to just trade on your platform. All right, so with these signals, I'll be providing you where to enter and where to put stop loss and where you put take profit. All right, so if you don't know what I mean by that, that's fine. There are lessons that are coming. I'm going to show you what the entries are, what are the stop loss, and what are the take profits. Okay, so deposit into your Deriv account using various payment methods provided by the platform. All right, so those are the only two things that you need to do. You create an account with the link that I'll put in the description below and deposit into that account. All right, so I'll show you in the next videos how to do those steps. So yeah, don't worry. Okay, so what are the advantages of you trading synthetic indices? All right, so there are many trading instruments out there that you can actually use for trading, and one of them is actually you trading forex. I'm sure a lot of people, they know the forex market, and the other one is for you to trade stocks, futures, commodities like gold and so forth. But synthetic indices, they are actually offered by the broker called Binary or Deriv, and these are the advantages of you trading synthetic indices over any other trading instrument. All right, so synthetic indices are not affected by news or events. What do I mean by this? When I started trading, I was trading on the financial markets and on the forex markets. All right, and I was really focusing on the technical aspect of trading, where I'm using technical analysis for me to actually find my entries and my exit points. But I usually got really surprised with how the market moved without respecting my setups, without respecting my technical analysis. Then I later realized that it's because sometimes the markets don't respect your setups because of the fact that there is news that doesn't really care about the technical analysis. The news will actually affect the market in a way that might surprise you. All right, so a lot of people, they lose money in the forex market because they are focusing on the technical side, the technical analysis, but when the news comes, the fundamentals comes, they actually go into very deep loss because it's very unexpected and it comes really quick, in a way that if you are someone who trades without stop loss or something like that, you can actually get blown very easily when it's news and when it's announcement of events or something like that. All right, so trading indices, you don't have the risk of you getting caught on the wrong side of the market only because you didn't check the fundamental analysis, and that's one of the things that kills a lot of traders. All right, and they are tradable 24/7 continuously every day all around the year. All right, so they never stop. These markets are continuous. All right, so the markets, they don't close even on weekends. As you know that the forex market, it closes on Friday and then it opens up on Monday. All right, so on the weekend there's nothing happening, you cannot trade, you only trade the weekdays. All right, so because the indices trade continuously, there is low risk of price gaps. All right, price gaps are a situation whereby maybe you are in a trade on Friday, all right, and then Saturday, Sunday, all right, Monday the price open maybe higher or lower, or very low or very high than the price that you left it at. That is called a price gap. It can actually take you out completely, and it can even put you into minus if you actually are trading with a broker that doesn't actually protect you from having a minus balance. All right, so they are very cheap as well to trade and do not require a lot of margin. All right, if you don't know what margin is the amount that you need for you to open a trade. All right, so the amount that you need to open a trade on synthetic indices varies from even smallest cents to, you know, even just, I don't think there is a synthetic index that actually have any of its minimum lot size taking margin that is above $1. All right, so you can actually trade with $1. All right, they are very cheap, like what I said, and they have a constant movement as compared to other markets that may trade very slow or faster during some periods. So here's what I mean by that. Synthetic indices, they're actually moving all the time. All right, as compared to forex, commodities and stocks, sometimes these instruments can actually be very slow in moving. All right, in a way that sometimes it might test your patience, you know, because the market will be ranging forever or even not moving, you know, playing at a one spot or something like that, and that can actually give you less trading opportunities, as well as, you know, sometimes leads you into making very wrong decisions where you want to trade those choppy markets just to make sure that you are placing trades. All right, so trading synthetic indices provide a very good risk reward ratio. The risk reward ratio is the amount of money that you're risking as compared to the amount of money that you're making. Like what I showed you when I was starting this presentation, I showed you the trades that I made with $11 going to $90, the trade that I made with $45 going to hundreds of dollars, the trade that I made with a couple of $100 to make, you know, even several $100 from it. Okay, so the money that you're risking, right, and the money that you're actually have the potential to win can be actually very high because of the fact that synthetic indices, they move very quickly, number one. Two, they also are very cheap for you to actually place as much trades as you can. All right, so there are many strategies that you can use to trade synthetic indices, and we're going to touch about those in the next videos to come. All right, so right now I would like you to give a thumbs up if you are getting value so far, and if you are new to this channel and you would like to hear more or to learn more about trading synthetic indices so that you can make the right moves and the moves that I usually make in the markets, like what I just showed you, how I actually turn small amounts of money to actually a significant amount of money, you can subscribe to this channel and turn on the bell so that you don't miss any of the videos that I will release. All right, and with that being done, guys, let's move forward and let me continue to provide you with the value that you need to succeed with trading. All right, so what are the disadvantages of trading synthetic indices? As you know that in as much as something might have a lot of advantages, what are the disadvantages? And in my opinion, I actually think that the disadvantages are actually very low or risk, or they are actually outweighed by the advantages of trading synthetic indices. Number one, they can be too volatile for some types of traders. All right, so some traders are used to the markets that are slow, or some traders are actually slow to react, and some traders maybe might be having a very risk appetite, whereby they're using strategies that are actually have a very high risk to reward ratio. All right, and some traders could be very aggressive traders who actually put a lot of trades and trying to beat the market, trying to get a lot from the market without risking a lot. And you see that these traders, they sometimes get stopped out because of the fact that the VIX or the volatility indices or the synthetic indices, they actually move very quickly. All right, so because they are cheap to trade, traders tend to abuse this and over risk, thereby getting stopped out very early, or even getting accounts blown. So most of the traders account who are trading synthetic indices are blown because of the fact that people, they see that trading synthetic indices is very cheap, in such a way that now they place more and more trades because they can. All right, they can, but only to find out that the volatility of those markets is actually moving very fast as well, so they get stopped out very quickly. So that is one of the disadvantage. But as you can see, all of these disadvantages, they can be eliminated when you know what you're dealing with and when you know what you're doing. All right, and another one is that they are very addictive. And since the markets are always open to trading opportunities that are available all of the time. All right, so during weekends, any time of the day, as you know that forex markets and other commodities markets, they actually mostly depend on opening sessions of the New York opening session, or the Asian opening session, or the European opening session. So synthetic indices, they are not really affected by those opening sessions or whatever. So the market is moving and presenting you with opportunity every minute, every day, every second. There is an opportunity for you to trade the synthetic indices. So given that fact, it could be that they are very addictive, because each and every time you can see a reason for you to trade. All right, and there are higher chances of retracement. Like what I said, they are very volatile, so in such a way that they can move in another direction very quickly and actually move in the opposite direction very quickly as well. All right, so we shall look into how to trade synthetic indices successfully. I'll leave the links in the description for you to actually go to the other lessons that I will provide. Okay, so what are the types of synthetic indices that you can trade? All right, number one are the volatility indices. Volatility indices are also known as VIX. All right, these I think the most popular indices on Deriv. All right, and they resemble more of forex market and other real market indices. All right, so they move almost the same like forex. If you open the chart of synthetic indices from 1 minute chart to even the 24-hour chart, you can actually see that they resemble how forex actually moves. All right, so it's very easy for you to use your forex strategies to actually trade the volatility indices. So the indices correspond to simulated markets with constant volatilities of 10%, 25%, 50%, 75%, and 100%. So as you can see right here that volatility 101S, all right, it means that it has got a 10% chance of being volatile, right? So the higher the number is, the more volatile that instrument is, all right? So the volatility 101S, it actually means that it actually generates 1 tick every second on this trading instrument. All right, so this is how volatility indices work. Volatility indices, VIX, it's a constraint sentiment indicator that helps to determine when there is too much optimism or fear in the market. All right, so what drives the volatility indices is the sentiments between the people who are optimistic and people who are pessimists when it comes to that instrument. All right, so that balance between the people, which means if the most sellers are more optimistic about their selling, or are more optimistic about the price going down, the price will actually reverse from where it was going up and start to go down. All right, so when sentiment reaches one extreme or the other, all right, the market typically reverses course. All right, so they can be easily traded using support and resistance lines, and basically all other technical analysis trading styles and strategies out there. All right, like what I said, they can be traded using most of the technical analysis trading styles out there. All right, so the other types of synthetic indices are boom and crash indices. A lot of people, they trade boom and crash indices. All right, boom and crash indices are indices that actually whether booms or crash, like the name says. All right, so boom and crash indices are synthetic indices which are a simulation from stock. All right, so crash 500 index, on average, price drops or crashes in price every 500 ticks. So every 500 ticks, the price crashes. All right, crash 1000, it drops in price every 1000 ticks. Boom index, it spikes the price up, all right, every 500 ticks. That is approximately every 500 ticks. And lastly, the boom 1000 index spikes in price over every 1000 ticks. All right, so how boom and crash works: it is not difficult for you to predict the movement of price of boom and crash. You can typically use technical analysis strategies to predict the price movement. All synthetic indices are not affected by fundamentals or news, which makes them a lot easier to just apply tools to analyze. All right, it's very easy for you to analyze crash and boom in synthetic indices because of the fact that they are not affected by news. All right, so the vast majority of forex and price action strategy work on boom and crash as well. All right, as you can see here, price has been respecting the technical analysis here, and you can see that the price respects exactly what I drew here, and as you can see, that is how I'm able to actually predict most of the time right price movements that actually are profitable to me. Okay, so jump indices correspond to simulated markets with constant volatilities of 10%, 25%, 50%, 75%, and 100%. There's an equal probability of an up or down jump over every 20 minutes on average. Okay, so the price jump, it can jump up or it can jump down every 20 minutes. All right, so the jump size is around 30 times the normal price movement on average. They can be traded using technical analysis as well. All right, and another one is the range break indices. The range break indices, these indices fluctuate between two price points, which are borders. All right, so these markets they range and then they break out of the range. Okay, so it can occasionally break through the borders to create new range, and on average once every 100 or 200 times that they hit the borders. All right, so whether 100 times that they hit the borders or 200 times they're hitting the borders, the price will eventually break out of that range. All right, so it ranges and then it breaks. Okay, Then there is the step index. Step index is almost forex as well, and this indices, there is an equal probability of up and down movement in a price series with a fixed step size of 0.1. okay, so this movement you can compare it to other instruments like Nasdaq and so forth, and only with the advantage that you can trade them even on weekend, and also there are no news that can affect them. All right, okay, so on our next lesson, guys, I'm going to show you how to start trading synthetic indices. All right, so if you have been thinking about starting trading, and if you've been thinking about getting someone who can take you from being 100% beginner, all right, and gonna show you each and every step of the way into how to become a profitable trader. All right, these lessons that are going to follow from here are for you. I prepared them just for you. All right, so the next lesson, I'm going to show you how you can trade synthetic indices and how you can actually profit. So stay tuned for the next lesson. Remember to subscribe, like the video, and share.
I've been making records since 90. Pack for Lamborghini since 90. Made my first meal of 90.